Say it ain't so, people. We had a red day in the markets. A wild and crazy day that brought us to the middle of a trading range we've been in for over a month. We're going to talk about my thoughts on this on today's Stock Market Brief show. Also, we're going to be sharing some trade ideas from the Twitter community. I posted out a note earlier saying, show me your best trade ideas. So I took about 4 of them that I saw clear risk to reward setups, and I'm going to share and call out those folks that posted it. So thanks for doing so. If we take a look here at the ES, yes, we had multiple reasons as to believe why we can see a pullback in the market. And we saw that pullback. Where did it come to? It came to basically backtest this breakout level, which happens to be right in the middle of the channel between 4,100 and 4,200. Now, I want to zoom out a little bit and use what's known as bookmap. Bookmap is a tool that I personally use intraday trading. It allows you to see behind the candlestick and visualize where market liquidity is. So it can act as potential levels of resistance or support, and you can read it in real time. Now, I'm zooming way out as much as I can here, and I just want to show you there's been levels of liquidity in some big areas that you might want to just be aware of if price were to reach there this week or potentially next week, and that is 4,250 and then down here at 4,000. Now, if we zoom into this, I'm going to share with you the daily expected moves. Going into tomorrow, the upper is 4185, labeled right here, the white line. Excuse me, and 4132 labeled down here. Some key levels to watch going into tomorrow because we can, and we have broken these daily expected moves. We have a pretty heavy set area of liquidity right over here, at least trading in the after hour session, 41.95, and then also down here at 41.25. We'll get into the price action momentarily in a more zoomed in perspective. Out of the 11 sectors, one was up. That was energy. Oil helped that out. Obviously, oil was up on the day. And then we had utilities and consumer staples, which are more defensive names, still down on the day. However, they led the way overall. Everything was down. What was hit the hardest? Well, we have NASDAQ Composite, right? That makes sense to me. NASDAQ Composite, NASDAQ 100, right around the same. They went on a monster run, and now they are digesting, obviously, some of those gains. And we discussed this, right? So SPY on the daily, I want to just reiterate what we talked about yesterday, right? Yeah, all the makings for a bull trap are here. So you're going to see this kind of play out, right? You're going to see the market digest. You're going to see it pull back. But there's not really any reason to worry if you're a bull until we start really breaking off these key levels. And some of the ones that I'm watching is the quarter to date. And then for a longer term perspective, the year to date anchored VWAP. And as you can see, yes, it was a strong day down to the downside, but we're still above the quarter to date anchored VWAP. Now, there's going to be some caution that's needed in and around these areas, but we'll explain that more zoomed in time frame and what you need to see to feel more confident. But I wanted to share this thought. I shared this with the Discord group earlier today. And the thought is this. So yes, we broke out of this contraction pattern. Okay, you can call it a diamond pattern. You can call it whatever you want to call it. I don't care. All we know is that price was contracting. And when price contracts, it then expands. That's how the market moves. It's a basic principle of technical analysis. Now, if I were to measure from this low to this high, and then we take that same exact length, right? If we take that same exact length and measure it from the breakout area, that actually comes up to fill this gap and this gap. So as we break out, we are currently back testing here. So if this is a back test and the back test holds, look for price to try to reclaim another year-to-date high and potentially fill this gap and this gap for a full measured move of this breakout of this consolidation. So that would be more of the bullish case. Now, also to note, which is interesting, if we look at a seasonality pattern, you can look here in the month of May of where we stand. And typically during this part of the election cycle, we're typically bullish in the middle of the year. Now, the first, we'll just look at the blue line. You'll see right here. So what typically happens is you get a move up, move down, move up, and then you get a pullback right here into around the middle to late part of May, and then you start to move back up. So if what we're seeing here is a pullback to obviously the middle to end of May, and then potentially we can come back up, and that could be a seasonality play more towards the upside. So that is one thing that I want to share. Now, you have to proceed with a little bit of caution, obviously. Today, we broke down through the daily expected move. You saw here we pulled into it. It held its support. But then when we decisively broke, it acted as a flip. It came back up and pushed off, forming somewhat of a bear flag, and not too far from the month to date anchored VWAP, and as well as the week to date lower expected move. You can see price broke out, and now it's kind of coming back in where a lot of this volume and chop was traded. Sometimes these levels where there's high volume traded in these areas, it can, price can get easily pulled back into those levels. Now, if we update this and look at the new daily expected moves, about 416.94 to the upside, 411.24 to the downside, and we're below a declining week-to-date anchored VWAP, and we're below a 5-day moving average. It's still currently inclining here. So things that I've seen that are interesting in the markets is sometimes the cash market session can't get back above it, and I've seen countless times where the after-hour session gaps us right back above it and then turns into a trend day and we rip higher. So if for some reason we gap way up here, just be on lookout that we might get some sort of, continued squeeze. That's always a possibility. If we don't do that, always look at this as a potential level of resistance. So if you're long here, or if you take a long more down here, or buy the month to date, or buy the daily expected move, or buy the week to date, and price eventually gets back up, say up into this area where the 5-day moving average is curling back around, or the week to date is coming down, look at these levels as potential levels of resistance. Even if you were to enter in long right out of the gates, say if we get a small gap up, price comes up, just be aware that there's a declining week-to-date moving average, and we're now below the 5-day moving average, and those can potentially act as levels of resistance, okay? So play something like that, or we can play up to it. Maybe we can consolidate and then break through that, and then the bullish momentum can continue. But as it stands now, from a short-term perspective, week-to-date and a 5-day moving average, you need to be on alert because we are now trading below those levels. One thing to also pay attention to here, if we layer on the RSI and the PMO, the RSI is in overbought condition. So you can always look for a potential positive divergence to form. So say if we do get hit further to the downside, okay, we're already here in negative RSI territory. Perhaps maybe we move up, go something like that. It can create potentially a positive divergence. And we've seen positive divergences like right here, where you see a low, a lower low, but the internals, right, showing another high right here, and then we get a move higher. The same thing works with negative divergences, where you get a price that goes high and higher, but the internals say, the oscillator says a high and a lower high, and then price comes right back down. So as it stands right now, this isn't necessarily the area where I'd be like, yeah, let's go short. Why? Well, because the RSI is already in this overextended territory, and we've already seen a strong move. What you'd want to see if you want to short is you want to see price to come back up, this to resolve itself, and then you want to see a lower high shown, and then you want to see that lower high hold, and then price to eventually come in, confirm, and then break down through this swing low and then move lower. That would give you a more optimal risk versus reward. So as it stands right now, people, once again, before we get into the daily trade ideas, we're in the middle of a trading range, back to where we were, no surprise. Don't be too shocked about this move. I wouldn't consider this the bull trap. However, if we start continued, obviously seeing more momentum to the downside, where can we potentially look at? 4,100, but from the bigger perspective, as we mentioned, 4,000 has some orders hiding out in that area too as well. We have 40.50 and also 40.80 that have had some higher levels of liquidity for over a day now too as well. So let's hop into it. A couple trade ideas. So the first one is from Walter. Walter posted TDW, clean and simple base breakout, high revenue, and EPS growth in the last new quarter. So these are my type of trade setups. I love these type of ideas. Now, this is in the energy and oil space. Now, overall, if I take away, what this is, and I look at just the chart, I'm like, okay, yeah, no, it looks great, and it is bullish. It's above the 20, above the 50. It's doing a base breakout, like he said. We just had an inside trading day, right? So if you look here at the price, it's breaking out, right? We saw a strong move of this little, this could have been an early entry right here of this tight consolidation. Remember, expansion leads to contraction, expansion leads to contraction, and we're seeing that contraction right now. So a potential base breakout to follow through, by the way, on good volume, to follow back up to this high and potentially higher. I mean, this is a great setup, and you can have clear areas of stop losses. So you can look at a stop as potentially down here at 42.50, or potentially even down here. And if you even want more conservative, you can even be down here, or the 200-day moving average. That's a little bit, steep in my opinion, where you'd be looking for upside potentially, 52.50. That would be the next area of resistance, but it could be smooth sailing after that point. So right here would make sense. If you do play inside trading days, you basically buy through the high of today's trading day, and then you add a stop loss below that low. That could be a little bit too tight, but overall, very good setup. Now, the reason why I said if I forget about energy and oil, right? Energy and oil, they've come off a lot, and we're entering into a period where oil has been relatively weak. And if oil does continue to get weak, we could potentially see a lot of oil stocks get hit. Maybe not this, but this one could be potentially affected by that. Now, that's overall narrative. So when we are studying just the price structure itself, once again, I just like how this has been contracting, getting very tight. And now we have an inside trading day. So great setup, great looking chart. If I take a look at NEO, this is from William. He posted NEO high and tight with sales growth, target 2150. So I like this chart too as well, right? We had this gap up right here. It could have been potentially earnings. I do not know. On good volume, and now price is digesting. Now, I will say this series of candles right here don't look all too hot in my opinion. They're a bunch of shooting star type looking candles, or inverted hammer candles. So, this could be a potential fake out. It's kind of like walking a cliff. Like, are we going to get a quick hit to the downside? It's going to, shake some people out and then potentially head higher. It's always a possibility. But what I like here is if you just look at this from this perspective, you say, okay, even if it breaks down, okay, let's say if it does, let's say if it comes down here, we'll just draw out a couple candles, breaks down. It's still actually, in theory, it could be a very good setup for a potential flag, pulls back into the 50 and a 200-day moving average, and they could potentially head back up. Or potentially look at it like this as it stands right now. If we start breaking above the high of this prior day's candle, that opens the door to change this kind of consolidation, right? We consolidated, we break out of this little consolidation, we can go try to get back up to this prior high. So overall, pretty strong looking chart. You can see that we broke out of this consolidation or this flag, and now we're kind of flagging there again too as well. This one is an interesting one, AZO. Plunge on earnings, tested 200-day, bound to test 100, EMA soon. I think eventual break of the 200 EMA is inevitable. So first and foremost, you got if you're going long on an earnings break, just be careful because obviously they can go down further, right? We're seeing a lot of volume that came in on this big break. What I am seeing from I could say from both a bullish and bearish perspective. From a bullish perspective, if we just look back to the chart, the 200-day, I'll draw a straight line. The 200-day has acted as a level of support through here, through here, through here, and now we're back up into that area. And if I just drew one more line, you can see that this is actually somewhat of a bull. It is a bull channel where you have the 200-day sloping up, the 50-day is sloping up, 200-day 20-day is sloping up. Now, obviously, price got below it. Boom, it hit to the downside. So what typically happens on these earnings plays is you can do what's called power earnings gaps and or pegs. And what you do is you wait for price to consolidate to see what takes place. So if price were to consolidate and maybe go sideways, it could potentially flag out, opening the door to head lower. Now, if you're playing this from a long perspective and you're like, I'll just have a stop under the 200-day and then I'll try to play long into here, that's also a high risk reward setup. Now, these ones get stopped out more frequently, but also, if you catch a nice move, it makes up for, some tight stop losses. So interesting trade idea over there. BAC, clean breakout of a falling wedge, triple inside day, broke out today despite the market going red. It holds up while XLF is down more than 1%, showing a lot of strength. Also, Buffett added on in Q1. So the wedge that I'm seeing here that he pointed out in his tweet is right here. Okay, so you can see price did come out. It kind of faded, a little fake breakout, but it didn't really, I wouldn't consider that a false breakout by any means. It's still just kind of pulled in, and it's still a very tight contraction, right? So price had obviously expanded to the downside, less of a move, and then less of a move. So you can see Price is obviously contracting here. And then when you zoom in, price is doing what he said, the inside days. And you can see price is trying to move out of it. It's back above the 20, back above the 50. Obviously, the banking sector has been getting hit hard, so we've been seeing more volatility. But if this is the case, you can potentially enter in early. You can have a stop under the 20-day moving average, or if you want to go a little bit more, that's always a possibility too. And then play this for potential pop up to around, you can do potentially 31, or even up to the 200-day moving average. You just got to be aware the overall trend, obviously, if you just look at the moving averages, is down. So good trade idea there. Thanks for everybody for sharing those trade ideas. Hope you guys got some value out of a quick analysis there. That's all I got for you on today's episode. See you later.